So again, I'm Albert Periu. I'm head of capital markets for Funding Circle. Again, thank you for being here. Funding Circle was founded with a very big idea. So to disrupt the financial system as we know it and get small businesses, which is the lifeblood of the U.S. economy, the loans they need to grow. I have several small business owners in my family, including my brother Mike, who's similar to my co-founders, experienced this loan access pain point. It's something where when we were first initially raising capital, our initial seed funding came from successful entrepreneurs that appreciated the literal headache, the massive, massive brain damage that comes along with applying for a small business loan. The way I used to describe it, and if you're a small business owner, you understand, it's about a mortgage application times 50 or so, and maybe times 100 post-crisis. But while trying to continue expansion of several small, successful gym locations that we own, 96 rejection letters later, 96 from traditional financial institutions, we realized something was wrong. We looked inward. We said, is there something wrong with us? We realized, okay, maybe we aren't alone here. We did some homework. But we quickly realized we weren't alone in this struggle to find capital. So while small businesses continue to grow, and they're extremely optimistic, you see a lot more help wanted signs than you did even 2 years ago. Bank loans under $1 million continue to fall. And this is an important note because a lot of banks, your local small business lender and some of these larger banks, they consider loans above $1 million to be a small business loan. That's really not the case. And where we focus is that smaller segment of 500K and below. They continue to fall. And small businesses, why are they so critical? They provide 55% of all jobs in this country, 66% of new jobs since the 70s. America needs small businesses, and we want to continue to help fuel their growth, and this industry will do that. Access to traditional credit for small businesses, it was in steady decline prior to the crisis. A lot of loans were being made in non-traditional ways. You borrow from a HELOC, et cetera, rather than going to a bank to get a traditional loan. Bank loans were hit hard, particularly during the crisis. No shock there. And this decline in access has continued as banks just focus on more profitable market segments. And they're leaving a massive addressable market for all of us to address. So how did we arrive here? Well, first of all, regulatory. The crisis altered bank capital structures. They all have to hold much more Tier 1 capital. They're submitting to stress tests. You couple this with a lack of consistency from a regulator and bank examiner perspective, they're pulling back. It makes them more risk averse. From an infrastructure perspective, and try to wrap your head around this, but it costs very similar for a bank to process a $50,000 loan and it does to $1 million loan. So what's a typical move for a bank, and one that I've actually experienced firsthand, they push you to credit cards. Try our credit card, 20% plus, fund your business. The reality is if a small business owner is looking for expansion capital, like Larry for expand his costume store, which I've actually been to a long time ago, those products aren't a fit. So they don't really address that need, particularly over $100,000 or so. And small business owners, they're very busy. I challenge you to speak to friends of yours that own a small business. Ask them where they want to focus their time. It's in growing the business. It's in focusing on that. It's not spending the 25 plus hours it takes for them to apply for a traditional loan. So at the same time, the world around us has changed remarkably in just a few years. Now more than ever before, as you heard Ron earlier and Matt speak, everyday folks are comfortable now. We're moving money online. We're performing everyday activities online. And again, as they mentioned earlier, analogous to companies like Uber and Airbnb that are mobilizing new workforces to meet consumer demand, all of us focused on small business. We're opening up a new asset class to investors like yourselves, and in turn, meeting small business demand. And I think it really is the moment many of us have been waiting for, where the fringe becomes the normal, and people no longer consider going to a bank to apply for that loan. Instead, you're at the comfort of your small business, you're on your mobile phone, it takes a few minutes to start that application. It's all about the transparency and the experience, that customer experience firsthand, that will have them coming to Funding Circle and others like us for a solution. So if you think about the online the market for SMB loans, it's still in its infancy, but it's been doubling and tripling year over year. You see many different products offered: merchant cash advance, receivables products, factoring products, and Funding Circle's focus, which is term loans, to name a few. Yields can range anywhere from 6% north of 100%. So depending on the size, duration, and risk profile of the loan, there's a different box for each of you investors in this room to fit into. Just given current yields, and likely the reason a lot of you are here for traditional fixed income products, the SMB market segment is going to be very attractive and continues to be. We connect small business owners to institutional accredited investors through our marketplace, $25,000 to $500,000 loans, 2 to 5 year term loan products. It's about combining the efficiencies of a tech company with our experienced underwriting team. We turn around applications in 1 to 2 weeks. A traditional bank loan, my personal experience, and many others that we lend to, 2 months if you're lucky, more like 3 to 4 months. And a lot of dark time in between where there's no communication. So again, there's a large addressable market. We've opened up access to a new asset class to investors. It's fixed income returns. There's marketplaces. There's a few different ways to invest, fund, fractional, whole loan marketplaces. The ecosystem is expanding right now. We're a global platform. We span both the US and the UK. We think this is a theme that will continue to expand and see other companies do the same. We see this as a global systemic problem, not just in the US and the UK, but again, several other countries. Our strategy, similar to the other online marketplaces for us at SME, is sound. You continue to solidify our borrower and investor base, you grow the audiences, you increase awareness and understanding, you create new products, and you maintain long-term relationships with both the investor and the borrower. And we see a virtuous cycle of lending and growth. As we continue to lend, we collect more data. Those data points, they strengthen our models, they improve our credit. What happens? We turn around, allows us to lend more, increases the market. As the scale benefits, they're massive. We built our business to scale in order to optimize our growth plans. We'll originate well over $1 billion across both geographies next year. And there's much more to come for the industry as a whole. Again, I think from a product perspective, from a term perspective, there's going to be a lot more appetite. You, the investors, will help us drive the products that we offer as we originate and find more borrowers. So when small businesses need a finance solution, whether it's us or someone else, we want them to go online. We want them to experience the seamlessness of Funding Circle and others. And you'll see us grow around expanding geographies. You'll see increasing a product offering, and you also see liquidity consolidated. Thanks, guys.
Thank you very much, Albert.